cool. All right. So what I want to start with is, since a lot of people are talking about high probability trades and executing and whatnot, I want to discuss execution and what it looks like from start to finish. But we're going to do it based on one tool for right now, so that we can get the understanding of actually executing. Okay. And so most of you know how to use fibs, or you know the way that I use fibs, right? Is there some people in here that don't have a clue on how to use them? And it's okay if you don't, because we're going to go over it even if everyone says that they do. But specifically, is there anyone that doesn't? Louis Hanks, Andy's good. Entry and stop loss. Yep. This is what I'm going to show you. Execution based off of fibs. So the reason why is because this is the one tool that you can take right this second and spend an hour learning it and use it to make money tomorrow. It's not, oh, I got to figure things out. I have to figure out how it comes together. You can literally pay attention right now, figure out how to do it. And tomorrow you can execute 2 fib trades and hit 100%, make $500. No big deal. And that's legit. So this is going to be redundant for some people, but the simple fact is this is our tool to measure a trend. And a trend is simply a starting point and an end point where it changes. So we're going to take any trend on the map, and wherever it breaks, we're going to measure that top down to the bottom. It's as simple as that. Does that make sense to everyone?
Yeah.
The only thing I don't want to do is go over stuff, because this happens all the time, and then have people not ask questions or not say anything while I'm showing them. And then the next day, all day long, they're asking me the questions they could have asked tonight. So just don't be reserved and just ask whatever. Don't feel stupid or anything, even if you think that you know what you're doing. Okay. So point is, every trend that we have, we're measuring that trend. It's that simple. We're taking a trend, we're measuring the break, and then that's telling us where price is coming back and where price is going to land to keep going to our target, the 127. And so as far as fibs, there's a ton of fibs levels, and you don't need them all. People have the 23, the 50, 60, 76, 100, all these different levels, which are relevant, and price will bounce on them. But for a systematic approach, these are the levels that matter. We're looking at price coming back to this golden zone right here. This is the trigger zone, and this is our target. And this process is going to happen all through the market, no matter how small, no matter how big. I could measure a tiny little retrace or a tiny little trend, and there's going to be a tiny little retrace and then bump to a 127. As far all the way to the big picture, there's going to be the same thing. So now the part of execution. So if you guys have questions about how to draw the fibs, then let me know now before we get into this. If everyone's good, we're going to move to understanding how to use them actually.
My challenge, my challenge is sometimes I get confused where to find the bottom or the mouth of the fib, and then the head and tail, both sides. Because
right.
Let's say that this whole trend, if you see, the trend is going, and then you are either waiting for the tail and to fib it out, but if it continue going and you still have to wait for, or you want to fib it on the other way around, then where to actually find and where to start. That's where I get confused sometimes.
So here's the thing that'll save you, and it's the trick for everyone, because everyone learning this asks the same questions. Where do I start? Well, it broke there, and whatnot. Every trend, just imagine this process from the minute scale down to ticks, down to weekly candles, this process is happening. So even this trend right here, if this happens in the morning, boom, and then all of a sudden I see a doji and a couple candles and I'm like, okay, this is my trend. I measure it out. And we didn't actually retrace there. We did. There's another level of fibs that I'm going to show you guys tonight, but it's still going to retrace and head back to this 127 target because maybe it bounced on the 718 or whatnot. But that's a low percentage of trades. The majority, the high probability is here. And that's a big thing about trading. And this is a big thing about execution that we're going to talk about. Most of the time you guys have trouble with execution because you're not consistently following the same parameters and protocols for the trades you take. One trade you take is a breakout. The next trade you take is buying a dip. And the next day you're taking all these different type of trades rather than taking a handful of setups consistently over and over and over and over so that you know how those setups operate in all market conditions. Mm-hmm. And so regardless if this bounces here or not, the approach to start out while you're learning this is if I draw that there, this doesn't retrace back to this, I leave it alone. I don't take that trade. I didn't get it. I missed it. Big deal. It happens again. Mm-hmm. Big deal. I missed it. I'm waiting still because this is you're a sniper. This is not, you're not a private running the ground out there with a machine gun, dude. It just doesn't work. And you've already experienced that. Mm-hmm. So by this time, I've measured both of those and I haven't got a trade. I do it again. I see we break harder. Okay, this one's getting rid of this one. The thing is, this is a 1 minute and you're going to be simultaneously using a 5 minute or a 3 minute, maybe some, I think Pete used a 3 minute, but you're going to see a cleaner trend on a 5 minute chart, right? Where is this right here? Yeah. Okay. So on this, you're not even measuring it because it doesn't even break. You see it properly the whole time. Candle, 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 candle. It's still solid. Doji. Now you see a break right here, which ties into everything else. So it breaks. We just broke out of the 4-hour top. What does it do when we break out of a Kelt? It retraces back to test it before moving on. So that paired with a retrace right here for the fib makes sense. So don't overthink as far as where to draw it. Use your tools, use the timeframes to look to see where the trend is, right? Fair.
What I did, like in the morning, 9:30, I fibbed it out because I saw the trend, right? So I fibbed it out and I exited on the first 1.27, and then I couldn't wait. Then I felt like the train is already gone, so I didn't enter for a long time.
I'm gonna get to that too. That's a good topic. Okay, so let's talk about this execution. So like, can any of you tell me that you have a trade setup that you consistently take, that you know how price behaves around it, you're confident with it, you know how to execute on it? Do any of you have that right now?
Yeah, I do use the 30-minute skills with the cycle point 5 minutes. Mm-hmm. Basically, I wait for the price action to go towards the 30-minute kilts, and then wait for a signal on the 5 minutes. If it gives me a bear signal and we are at the 30 minutes tops, and that has to be the 5-minute candle as well. Usually the price goes down to the 30 meds and then continues. If it wants to continue, it will continue to the bottoms. I've been testing this strategy for the past 7-8 months. Good. Shared it with Mike, with Simon.
He told me.
Yeah. So
so I know that you've focused more on specifics too, Pete. So that's good.
Yeah.
And that's the point. Is analyzing something for a long period of time so that you know how it works, which he does. He has his own specific trades that I've never taken, but he knows them inside and out. And that's the point. So if you guys are not at a point right now, like that, you're just not consistently making money every day or every week or high probability, then I highly recommend that you master this setup first, because this was my first profitable year. I didn't even use Celts yet. I didn't have algos. I had a MACD, the trend bar, and I ran this fib at the open. And all of a sudden I started winning all the time and I started seeing it more and more. And that was my first green year. So I really can't stress enough how simple this setup it is, but how much it can do for you. And so let's talk about executing at this level, because obviously it's easy in hindsight to see, okay, I drew the trend here and price comes back and yeah, it bounced there perfect and went up there and everything looks real simple to do. But that's not the case when the market's going, right? Like there's a lot of price action down here. Even if you have the level nailed, you're going red, you're going green, you're taking a wick, and before you know it, you're shaking out because you thought you were wrong. And then all of a sudden price takes off and you got to run and you missed it or whatnot. And I'm sure that happens to a lot of people. That's what happened to me when I didn't really understand executing and how to make my way into a trade or the whole approach. So along the lines of this and executing on this trade, there's a lot of things that go into this. And the first is this zone is the trade entry. So we have a little bit bigger of a zone here. So most people are going to treat it like, oops, sorry, just got a message. Most people are going to treat their entries. They're going to say, hey, I'm getting in here. I have a 10% stop loss or $100 stop loss and whatever. And we don't operate that way because we're aware of where price turns. So we don't have to wonder about our stop loss. We don't have to wonder about anything, because if price doesn't hold this turn, it's going to break down. It's not going to go in the direction that we want it to. And so that's an important logic that you have to maintain. And the logic is this: if we're taking the entry on the 618, I'm taking a starter entry because I'm aware that price can still drop down to the 50% and still go bullish. So if I end up grabbing an entry up here, most of the time it's going to be making my way into the trade so that I can endure this push down right here. If we go past this, I'm not waiting. I'm not hoping. I'm not, oh, maybe it's going to bounce. I'm sticking to these parameters and these rules. I don't look at price. I don't look at red. I don't look at anything. I'm sticking to the rule as far as if this breaks, I'm out. If it turns around and runs, oh, well, I don't change for different scenarios. You have to stay consistent with how you approach and how you tackle things. And so I'm taking this entry right here. Most of the time, if it's landing on the 618, it's going to juggle around right here, make it to the 50% and take off. And if it doesn't, it's going to just have some candles and take off, which is why I take that entry. Once in a while, it'll come down, it'll snap down a wick and then take off real fast, which you can recognize. If that's the case, you only get a starter position. It's okay. You still have to stick to the parameters. So I'm gonna enter as a snack here. I always call it starter or whatever. And if price is coming down here, I'm gonna enter with a full position usually, because I'm not waiting for this. I'm gonna snap out of it right away, right here. And so, does everyone understand that part of it?
Yep.
Okay. And so the commitment on this is two things. Will we get violated and we exit, or we exit at our target? Once in a while, especially in these conditions, shit will get squirrely and maybe, you just decide you want to take your profit early. Okay. If you take your profit early, that's fine. The trade is off. You're not going to jump back in and chase it to the level or get back in some abstract way. You have to commit to the levels, because when you make those abstract decisions and that are off basis, then it also creates something in your mind which tells you that you can get away with doing that. And the next time you try to get away with it, it's going to bite you in the ass, bite you in the ass, bite you in the ass. So it just sets you up with a bad habit. And so as far as executing the actual trade and entering the trade, there's three things for me. One, is I'm following the MACD, the 1 minute MACD. This is for me. I know some of you don't all use the 1 minute MACD, but as far as execution, I need it to be faster. I'm not looking for the crossover or down. That's too late. That's what people think they do. They think this is a buy signal and a sell signal, and that's not what this tool is doing. This tool is telling you where the wind is at your back or it's blowing against you. It's the strength, the energy behind something. And so I'm watching something retrace down. I'm watching the process of it being bearish so that I can recognize when it starts to slope and when it starts to change to bullish. And right about here, the slope changes. So that's what I'm looking for, the slope change right here to let me know. The other thing I'm looking for is this, algos. And so right here, we see the price run up. I'm waiting the whole time. Let's just say I didn't get in on this entry. We're long the whole time. Boom, it breaks. It starts to break down. I draw my fib. Now I'm waiting. Now I'm just waiting. I have my retrace level. Everything's starting to come down. I have a heads up early, right? Because what do we have right here? We have divergence. So we know price is coming back to this point already. So that increases my bias for my entry here, entry level here. And so we get a snap here, we get snap, everything's bouncing. This is important to remember too. A lot of people they'll have their entry levels, and as soon as price gets down there, they want to jump into it. And then they get in too early before anything. You're going to have multiple opportunities to enter. So you never have to panic. You need to start worrying about and practicing composure when you get to levels. You're in control. Do not be at the mercy of the candlesticks. So as soon as I see this divergence, we're retracing, I already know I'm entering this. So those of you who are looking for this high probability entry, this is it. I have divergence. We're running on a fib setup. This is my high probability entry. As soon as we bounce down here, we get a pretty aggressive candle here that doesn't go anywhere. It just wicks down there. On the next candle, we have slope up. I'm in right here, and I'm in right here at a full position. So I'm in on this in a full position because we have divergence and because this is closing, the energy is starting to go bullish. If I got in back here, which would be early and which would be a mistake, or maybe I'm just aggressive and I'm really confident and I know that it's going to go up, I'm still going to have a starter position. It's going to be, oh, I grabbed a position, tested it again, I grabbed a position, and then on the confirmation here, I'm in my full position. So there's two ways to approach that right there. For you learning, you also need a manageable position, right? You can't come in here and get too big of contracts on options, too many shares, too many future contracts because you want to make money or whatever. I spent a month one time when I first started options just trading one single contract from my entry all the way to target over and over and over so that I could get the feel for how options moved and the price movement on them. And so that's something that you have to understand and be aware of. So when you're doing this, you need a manageable position. You need a position that allows you to endure this drawdown. If you have to take it and you go in the red and you don't see red and you're like, oh shit, I got to get out. Doesn't start create panic in you. None of your trades should ever make you feel anxiety and panic. If you do, then you're not in the right trade. And you also don't have confidence in what you're doing or the setup. You should never have that anxiety feeling with your fingers crossed on where price is going. You should be taking a trade knowing where it's going. And if it doesn't work out, you're out. There's no qualms about it. And then you're also okay with taking that loss because this is a lower probability game to be victorious, kind of like baseball. If you hit three for 10 or in the 300s, you're a good player. But that doesn't, even when you know you're a good player, it doesn't feel like you're a good player because you're losing most of the time. You're getting out most of the time. But it's the same way here. You're going to manage your losses the times that you get out, and when you execute the right play from top to bottom, they're going to outshine your losses big time. If I take $100, $200, $300 loss 3 in a row. And then all of a sudden I execute perfectly. I get my shit together, focus, I take the right trade, I execute, and I nail 2,000. Those don't matter to me. And that's how it works for me too. I keep my losses like that. They don't affect me. I don't take one and then I'm like, oh shit, I got to get that back. I got to get it back right away. I know that I'm going to get it back. I know that I understand and respect that that's how the game works. I'm never going to get them all right. And I know that I'm going to see losses in there. And today's a perfect example of taking a loss in the morning and then the day just runs rampant and you make 10 times the money that you lost in the morning. You have to know and believe and understand that happens, and that's how it works. Even if you have a bad day yesterday, you don't freak out about it and dig yourself a hole by trying to get it back, trying to create something out of nothing. If you don't have a setup and you're negative and you have to end the day negative, you just have to end the day negative and come back the next day like today, because the market will give you what you need. It just will, and you have to trust that. How would I manage my stops? Did I answer that already, Keith, or do you want me to go into a little more? Did you hear me, Keith? A little more. Okay. So this me and Trax and a lot of the pros, it's just a different concept of how we're doing stop losses. And that's because we've managed to find the turns. We know where price is going to turn, right? Most of the people out there, if you're watching a YouTube video or whatever, they're using levels that they are hoping are going to be the level that price turns around, or they're hoping that level is going to be the one that works and whatnot. And that's why they have a level, and then they have this, 5% or 10% stop loss or whatnot. So we're not operating that way because this is the turn. And so if this doesn't work out and it breaks below this, we're not managing a stop loss down here or a percentage or whatever. The trade didn't work out. It's off. We don't need to worry about it. This is a hard line in the sand. And this isn't
so one more thing to add, Josh, on that. Let's say today what happened is today is like, I think everything happened today is a good example to ask questions. And
okay.
Yeah, so let's say I entered in the morning and I am already in the money or at the money, and it moved to my first 1.27, which is 1, 2, and the larger retrace pullback, right? The first red line. Now, do you exit right there? You seeing that first red candle? Because that's what I did. I saw the first red candle and I exited, not waiting for it to retest.
Let's do it visually. Let's talk about what. So what are you saying here?
So I'm saying that right at 9:30, I saw that I picked it out and I saw the trend like 1, 2 candles moving up, right? Okay.
We can go to that time period. Let's just look at it properly. So this morning,
9:30.
Do I have the right time here? Yeah. Okay. So 9:30, is that Eastern time? 9:30.
Eastern, yeah.
Okay, so that's my 8:30. So yeah. Okay, so we got it right here. Okay, I got it. So I'll fib this out real quick. So did you go off this guy?
Yeah.
Okay, let me make this bigger so everyone can see it.
But not there, not that one. I saw a little small one, right? The first pullback. Can I see that? Right. So let's take this example. So for example, hypothetically, I entered right there at the first, right at the 9:30, and I fibbed it out and I exited on first red candle. And that was why my 1.27 as well. Now I didn't wait for it to retest the 618 of the whole move, right? So with that said, I'm already out of the trade. If what you're saying is to be able to stay in the trade and take the full advantage of trend, do you suggest that be in the trend and stay in the trend and wait for it to retest 0.618 and then exit? Or it's a good strategy?
What do you mean exit on the 618?
Like
this is your entry level.
One option.
What?
I entered at 9:30 with one option.
Right at the open?
No, where you see there's a consolidation and the first breakout.
Right here?
Yeah.
Right. Okay. So that's a completely different scenario. So you're entering before the trend, right? So you're just, which this is as my suggestion, unless you have things dialed in perfectly consistently, like playing the open aggressively like that is dangerous. I mean, one, yeah, you got to break out today, and I'll play the open like on certain setups or not. So, but this is not that kind of setup doesn't correlate to this because you're taking something before the trend. So what happened? What we're discussing is you have this trend. There's not a target here yet. Once the trend is over, now we're looking for our trade. We see that the trend is over and it's breaking down. So now I'm going to measure it. Okay, boom, I measure it. Now I have the level that I want to enter and I'm waiting for price to come to me. So price comes to me in this zone and I'm entering here, exiting here. And so as far as is stop loss or getting out, since this is the turn, this is where price is going to bottom out, turn and go up, this zone. If this zone is violated, I'm jumping ship. There's no waiting around. There's nothing. But let's just move this up just because. As far as the stop loss and how you're managing it, kind of going back to you, Keith, I'm not bailing on these wicks like this. They go so fast. I flash red for a second and it's back up before I can even make a decision. That's not freaking me out and jumping me out. Now, obviously, if it's just some huge wick and something happens, I'm going to go. But I'm expecting this to some degree, which is also why I need a manageable position to deal with this because this is shit they do. But I'm looking for this to happen to get me out. Okay. I want some meat on the candle right here. I need to see this. Boom. When I see that right there like that, I'm gone. I don't even think about it. If they get some volume through the level or the support, then I know they're going to break it down most of the time. Sometimes maybe they don't, but that doesn't matter. That's what I'm committed to protecting myself. These flashes, I mean, these flashes happen so fast that all it really does is shake you up mentally and emotionally. So you get this candle right here, and all of a sudden, for a second, you flash, you're down $200. Oh shit. But then 2 seconds later, it's right back up here. So there's not even enough time for you to actually execute a decision. By the time you got over and executed your decision or whatever, it would have been you would have been back right where you are. So that's important for you guys to remember that.
So you're not keeping a tight stop loss.
I don't place an actual stop loss.
Yeah, right.
I think I might have told you this before. Like, depending on what's going on, conditions, or if I like am getting kind of aggressive and I have big positions, I'll have like a safety stop somewhere that's like emergency, that like if something deadly happens, I don't want to break this level because it's going to hurt. Because which is something that I only implemented in the last year because I had some SPX options. And I was up like $9,000 on them, and this humongous candle happened to hit me and put me down like 30. It was eventually 30K, but the first candle was like went. I was down like 10K, and then it was back up and then down another, and it spun me out emotionally, like that I lost my path. I lost my like how to calculate, how to figure everything out. So I'll keep like a safety net somewhere in case something like that happens in certain situations. Otherwise, everything is just a mental stop for me. They stop hunt. They literally have programs. They don't call them stop hunting, but they're going to go jump around, jump bids, jump back and forth until they ping, 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 pick everything off. Like if they have a plan that price is moving up here and they have, you know, they're already predetermined, we're going to 15,270 target, and they have order, these little orders. Well, they're going to take a break, gobble, 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 and then go up. And it's not necessarily to like take out retail. They don't even really think that way. It's just to grab more volume, all the volume they can get, because they know they're about to move up and get up. So me placing a stop loss there is just adding to the programs hunting for volume. So no, I don't place anything tight whatsoever.
Can I ask you one last question on this? So you said that you have entered at 618 before it retests the 50 and exit on the 50. I got it. But you see that this price, the uptrend moved, and my intentional or my mental status is that I see the first red candle and I just exit to keep my profit.
Yeah.
But do you
keep your profit though? You mean off of this right here?
So second one, the second where
here?
Yeah.
Okay. Yeah. No, we're going to talk about that too.
Okay. All right.
So
yeah,
I want to find a better scenario. Let's see if we can do this as far as this, because like I said, you can talk about entries and I could just draw you a fib and be like, it's this easy, hop in, but that's just not how it works. So let's just say we're going off of this trend. We pulled back here like we just did, and boom, it hit its target. So that thing's dead. I can erase it. And now I'm going to measure this one. Perfect. This is a perfect example. Okay. So now this is important. And these types of things, they have to be planted in your mind as a strategy and a roadmap ahead of time. Like all of this has to be predetermined before you're trading. When you're trading out there during the day, it needs to be muscle memory and natural reaction for the most part. Not completely, but it needs to be reactive, right? Because price does all kinds of crazy things. The market does crazy things. You have to have this embedded in you so that you react properly to things. So the same scenario for this entire situation is how I approach it. If I get violated here, I'm exiting. Otherwise, I'm holding for the target. Unless for some reason I don't like how things are moving and we're having a really hard time climbing or whatnot, and I get a little oomph and I'm like, okay, I'm locking this in because I just don't like how shit's moving today. That's also going to be predetermined and pre-decided ahead of time. I'm going to be going into my trade going, price is moving choppy as hell. We're having trouble getting to targets and whatnot, et cetera, et cetera. And I'm already going to have it in my head that I need to be ready to exit early or possibly take profit early, predetermined. Otherwise, I only have two ways I'm getting out of this trade. If this is violated or if we hit the target. And so this doesn't change on those red candles. So based on what you're saying, Bear. So yeah, this scenario right here, boom, we start to lose some momentum. Yeah, there's nothing wrong with locking in your profit right here. This is freaking 30 points. Oh, well, you locked it in right here. If you're really focused and you're really watching everything, you're going to watch the MACD, you're going to watch the algos, you locked it in here. Oh, we get down here, you get to re-enter and do it again, right? Otherwise, let's say this is a farther away target or whatnot, and I don't exit here. When this starts to wind down and go red, the natural thing for every single person, I don't care how good you are, is you're watching your profit go away, right? Yeah. So that completely changes your plan. It completely changes your thought process. And then all of a sudden you decide to get out, you know, just because you're freaking out watching your profit go down. And then all of a sudden you realize, oh shit, we just retraced back to the level and oh, now it's holding and whatnot. Oh, I'm getting back in. And then wham, another red candle. Oh shit, I'm back out. And then you're just all spun out. You're not sticking with the plan. And if you don't stick with the plan, all this noise and chaos is going to do that to you every single time. Every single time. So I've learned that losing money, I've learned that. So I stick to the process that I'm going to stick to, no matter the condition, no matter if I'm wrong that time, no matter if it's funky that time, no matter if it doesn't. Every time I'm sticking to the process, and that's I'm in right here. Boom, we go up. I'm still in. I'm not exiting. I don't care if my profit's going down unless I lock it in early and I just take a break. I stop. If I lock it in and stop, okay, that's fine. But if I'm watching it go down and it shifts into that emotional thing and getting out, you're wrong. So what's better to do typically is just ride the trade out. If this ends up being one of those trades where we'd have to take a loss right here, we take the loss the proper way. So it's not going to be a big loss, and it's going to be one of our losses. We took a loss right here. It's going to be a small loss because we took the loss properly and whatnot, but it doesn't, right? We hold the trade in, boom, it's just crazy. This one might scare us a little bit, but still, we're just getting wicks. 2 seconds later, we got a doji, and what happens? We started sloping right here already, right off the doji, and we have what? Algo's buying. So when you slow things down and you stick to a process, you're able to evaluate all the tools that you need to evaluate. Because if I eliminate this algo and I eliminate this, and I'm just watching these candles, which we're all guilty of, they still will draw me in if I'm not focused enough. This takes all of your focus. If I'm not focused enough and I get sloppy, which I do once a day at least, then I'm not going to be watching the right tools. I'm going to be watching the candles and I'm going to fuck it up. And then I'm going to go back and look at it. And what's going to tell me is if I followed the process, then it worked out perfectly, because it does. If you follow this process, it's not going to create a trade that doesn't work. It just doesn't. If you follow this process, it creates a winning trade every time. And if it doesn't win, it's going to be a couple candles up like this and then fail. So my point is, we ride this down. We're not worried about it. We're still in the ideal situation, ideal time frame of mind, watching the tools. Okay. Well, the algos hold here. Let's do this one. Algos hold right here. They're not breaking down. Boom, 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 boom. They're holding. That's great. We are bear cycle here. Now it's starting to pinch. That looks great. Algos are buying. We got a doji. We're holding this level. Boom, I'm in again, or I'm still in for my other one. And now it runs nice and clean. Boop, I'm out. So this process works flawlessly every time if you can be focused enough to watch and follow the rules. So based on the answer to your question, you're only exiting two ways, or I'm only exiting two ways when I approach this. I'm exiting on violation or target, unless I have pre-decided or pre-told myself, hey, these aren't the ideal conditions. We're going to get a trade in, lock some gains in early. We're going to exit early. We're not going to try to reach for the target because we're having trouble. That's going to be predetermined. It's not part of my strategy, because if it is, then it's going to skew the whole approach to everything. So that has to be a predetermined thing for me.
Hey, Josh.
Yeah. Cool.
So you were saying, you get the pushes down and then come back up, and happens within a few seconds.
Mm-hmm.
I assume that's mostly on the 1 minute. I do trade the 3 minute typically.
Mm-hmm.
But I guess what I'm saying is, on any time frame, if you get that strong enough push, and let's just say it goes under the 219 area, if you get enough volume there, it's probably going to hold under that 219 and around 218 to where or whatever price we're at now, 321. So if it pushes under that 321 with a little bit of volume, I'm assuming that you're not getting an immediate push back up over that 50%. It's going to kind of like hold under that and keep building stronger lower. So then that would give us more confirmation to exit, or Because I guess my problem is like I'll have my stop loss. I mean, a lot of time I've even messed with it, 5-10 ticks under the 50% just to give myself more buffer, and then it just, as you're saying, it stops hunting me and then keeps going. So or I'll see it like hanging out under the 50 and I'll be like, all right, this is dropping, I'm out, and then it finally catches back and keeps going up. So yeah, and I guess maybe that's just part of me feeling the process, but I didn't know if you had anything on that.
I do. That's good. I'm glad you said that. So two things we'll add here. One is there's obviously more to all of this than just this simple thing, right? But I'm trying to get us on the same page as far as how it feels to execute, and the things that you guys all go through are not wrong. You guys aren't wrong in like how you feel and the fluctuation and being early or being late and all that stuff. Like there's a refinement to all of it. So I'm just trying to get us on the same page for that. There's multiple things here. So
sorry about that.
No, you're fine. This is good. There's a whoops. Let's just do that. So the reason this is the last bullish stand right here, the 38, typically we'll reach down and maybe aggressive conditions or whatnot. And often, actually more often in a short setup, it'll reach up and touch the 38. So there's nothing wrong with you guys setting up your fibs like this, but then your strategy has to change a little bit as far as how you're getting in, because you just have expanded your zone. And so what I would say to you as far as using a 3 minute is don't be in a hurry to jump in, right? Like I like to use the 1 minute because I can see all of that action happening. I can respond and react like to what's going on. And that 1 minute cycle for me is ideal. But honestly, I've never spent any time on the 3 minute. I used to use the 2 minute, but I went back to 1 minute because I like the speed of things being faster. But so I can't, as far as like a 3 minute MACD, I can't speak on it because I don't have experience on it. But speaking around a 5 minute chart, and if I was just using a 5 minute chart, these kind of things are going to respond slower for you. So which is hard, in my opinion. It's hard to execute day trades without using the 1 minute because you need that speed. So let's see. So you get a slope here, which isn't bad. And you get slopes, here, which isn't bad. And you get a slope, here, which isn't bad. So I guess you have more experience with that. So you're going to want to watch for that slope, but don't be in a rush on these on the bigger time frame. Yeah, you're going to see volume. It's going to be treated different. But if I see volume on a 5 minute that looks like that, I'm gone, right? I have body through my level. So in that principle, it's the same thing. You're not going to see a body through a level unless it's going to go through that level, right? Just like right here, we get this body through this 50%. It doesn't snap back right back up. We got a body through it. And I guess they build a little bit differently during the day too, but I'm still looking for a body. I'm sure you're not seeing a body go through a level and then it's snapping back, right?
Not typically, unless it's that, bullish engulfing candle, which kind of pops out lately anyways.
Yeah. So I guess this is a little bit harder for me to tell you how to do it, besides the same way I would approach a 5 minute is to be patient, right? If you want to get in, you still have to take a manageable position, right? Like if let's say I'm taking this, I'm not taking this entry right here on this, even this wick down to the 50%, because look at that 3 minute MACD, we just crossed down. So I'm going to wait a little bit longer, even though you already know this, I kind of like these algos on 3 minute though, but you already know you have buying happening, right? So you have divergence here. So you're heading into the same thing as me. This is an entry for you. It's high probability that we're going to hold here. It's just a matter of getting the right one. So yeah, you're waiting down. So you get a doji here and then you have a body back over this. So yeah, you're in here and you still have plenty of range to your target, right? If you're waiting for this process to develop, then you're not going to deal with that stuff that we're talking about, the chaos. That's not happening when everything comes together and starts, the motor shifts into gear. That's happening when everything's transitioning. And more often than not, if you go back and look, you're gonna be like, oh shit, I was in way too early. You know? And
yes, I do know what you mean.
The difference is also of Trax is he's not as aggressive and big size and he's higher probability in winning. And he waits longer than me, right? He waits till a candle confirmation. And I've always just been like, dude, I can't do that. I'm missing the entry, but he also wins more than me. And he also waits that long. So there has to be something to that as well, right?
Okay, thank you.
Mm-hmm. Okay, so as far as execution, you guys asking questions in here? I didn't read. Oh yeah, that's a good point there, Pete, because I've ran into that actually. Been in a trade and lost power. $30 now. But if there's a huge candle piercing through 50 and 38, would you wait for it to close under it or exit? If we're talking about a wick that's going through it, then I'm not responding to wicks. Do you see how everywhere that we're looking right now, yeah, price broke through it. I mean, this broke through 60. This broke through 10 points, but there's no body on it. I don't respond to that. And yeah, I have my profit and loss right on my DOM. For every tick, I can see what's going up and down, but I'm not too consumed on it. And that's taken me some time to do that too, though. But you need to practice that. If you follow candles and you follow price, you will never come out on top in this game, ever, no matter what. It's impossible. We're just, the way we're made as humans, we cannot watch our money go up and down and that be our sole deciding factor of how we approach something and win. We just can't. Yeah, the body is everything for me. Let's go back to 1 minute. And so the other thing is, as far as these trades and entries, I'm telling you the precision execution part of it, as far as the final steps I'm taking to actually enter the trade. But there's the pre-qualifying, which is I'm not trading against the 15-minute MACD. So can you guys still see my chart?
Yeah, we can.
Okay. So I'm not trading against this 15-minute MACD. This thing has 2, maybe 3 cycles a day. It doesn't go back and forth and cross a bunch of times. And it operates probably higher than 90% as far as controlling the trend or when that trend opens up. So I don't take trades against this. And if I do, it's a very obvious rejection or dump that's going to happen. And I'm really confident in it. But when you're learning and trying to be profitable and consistent, that's something that can help you dramatically, is not trading against the 15-minute MACD. And look at today. From the open, we blew open. We had the wind at our back all day long. And even right here, when we start, we slope down, right? So we get a slope here. And we start to lose that MACD. It starts to go down. We're sitting on support. This is actually a bullish entry right here. But look at what they do. It doesn't cross over. They ride it right on there until we hold support on the level, and then boom, it launches back up And then when we finally break down, this is crossed down. So don't trade against this. If you start not trading against this, you're automatically going to increase your winning percentage dramatically, like tomorrow. And so this is a pre-qualifier for how I'm trading. So today I'm going to be trading bullish all day in the morning until things change. Then I'm going to be trading bearish. That's the other thing. And then also I watch the 5 minute as well. They're going to be in sync a lot, but let's say we have 8:30 right here. That's not a good example. Once in a while, the 5 minute and the 1 minute are going to cross down, and we're going to have that cycle down while the 15 minutes still going up. And that's going to help me wait until they both come back around until I'm executing trades again. Most of the time, the 5 minutes going to be aligned with the 15 minute. Sometimes not, but those three are key for me as far as my decision making going into those execution points. So increasing the trade entries and the high probability, that's instant for you guys. This instantly can change your probability of your entries tomorrow by just implementing those. And so this is something I was talking to you about, Hank. The majority of people, they do not follow parameters to trading. I have spent enough time just going into rooms and paying different subscriptions just because I want to see what people are doing, what they're teaching and whatnot. I've done it for the past 5-6 years. And I'm telling you right now, the majority of the people don't fucking know what they're doing. They just don't. And they don't operate under a specific system. They're just like, oh, here's head and shoulders, I'm in, and here's a ABC, I'm in, and here's this, and I'm in, and oh, let's take this trade setup, guys. I saw it on the YouTube video, and it's happening right now. That's not, you can't win that way. That's not trading. It's not, I know 75 different patterns and I recognize one and I take it. That's you won't win that way. You have to have a narrow path that you've mastered, that you know how it works in all different conditions, because the conditions trade all the time. And I'm fairly confident in the majority of the conditions that we have because I've faced a lot. Besides earlier this year, this condition was completely new to me, and so that I had to change my entire trading. I'm an aggressive options trader, but also the market changed for aggressive options trading, and I'm doing other things outside. I didn't have enough focus to do it, which was push me into futures so I could still pay myself and take care of my bills while doing other stuff because the market changed. So otherwise, I've been trading the same tools in the same conditions, but now, you know, a few months later, I have these conditions dialed in because of my tools. I'm not changing my tools because the market conditions change, which is a lot of people do. The same shit that I've been doing for 7 years with just adding, you know, a little bit extra onto it, adding a little more extra onto it, making it a little bit better. But the core of it was this right here, the MACD and these fibs that people don't